Hello, and welcome back to this course on business skills for agro-dealers. In this course, we have been offering advice on how agro-dealers can increase sales, manage your finances, operate a more efficient business, manage risks, and most importantly, increase profits. In other sessions, we've discussed the challenges agro-dealers face, such as uneven cash flow throughout the year and finding ways to expand your business if that is your goal. Sometimes securing a loan can help you overcome these challenges and take advantage of opportunities. In today's session, we'll be discussing how to secure credit and use it responsibly so that you are able to pay it back quickly without going into long-term debt. In the studio with us are 3 agro-dealers who have been sharing their experiences with us: Mukisa, Damba, and Namazi. Hello, everyone.
Hello, it will be interesting to hear what you have to say, as in all my years of doing business, I have never taken a loan from a bank.
I am more interested in paying the loans I already have.
A loan would definitely help start my business if you know how to convince a bank to give me one.
We will address all of these concerns and more. Anyhow, let's get started. Securing credit to grow your business is challenging but not impossible. First, you need to...
I am sorry to interrupt, but my business thrives because I work hard. I have loyal customers and I own my shop. My belief is if you do things right, you don't need anyone's help.
Not every business needs a loan. You are right, Mukisa. Taking out a loan won't make you a better business person or get you more customers. It certainly won't solve your money problems if you're unwilling to keep records and make a budget. But there's a lot of good a loan can do for a business. It can help you pay your rent and your suppliers when the season is slow. It can help you invest in new equipment that will make operations more efficient, like a better lorry. It can help pay for additional labor if you decide you need to expand your business.
I am convinced. Where do I apply? My roof is leaking again. My motorbike is making a terrible popping sound and I owe so many people money.
It sounds like you are very much in need of additional financing, Damba, but you have to be able to convince a lender that you can repay a loan. When you repay the loan, you don't just repay the amount you borrowed, or what we call the principal. Every lender will charge a small amount of what we call interest. This is usually a percentage of the principal. There may also be additional fees, such as processing or origination fees. But let's return to the subject of interest. Some financial institutions might charge a 20% annualized interest. That means for every year you do not repay, you will be charged 20% of the total amount you borrowed. So, if you borrow 10 million Ugandan shillings, you can expect to pay about 12 million back, presuming you pay it back in a year. Now, if you do not pay it back in a year, the next year you will be charged 20% of 12 million. As you can see, it is important to take out a loan that is realistic for you to pay back, and it is just as important to pay your loan back in a timely manner according to your agreement with the financial institution. You must convince a lender that you can pay the principal back with interest. Let's take a step-by-step look at what you need to do to make the best case possible for being approved for a loan. This includes determining the purpose and amount for the loan, deciding on the loan type, writing a formal business proposal, providing collateral, and, if you are approved, repaying the loan. Let's take a closer look. The first thing you need to do before you even talk to a lender is determine the purpose for the loan and how much you need.
Well, that's simple. My purpose for loan is, well, I need money because I don't have enough of it. If I keep good financial records, I shouldn't have a problem telling you how much I need. It's right there in black and white.
All right, you need money, but you need to be specific about how much you need and why you need it. Damba, you mentioned you have a nephew.
Yes, very bright young man.
Would you say you'd be willing to lend him money? If you had it, of course.
Well, of course. If I had money and my nephew needed some, I would absolutely lend to him.
So suppose he came to you and said, "Uncle, I need you to lend me 3 million Ugandan shillings." You ask him why, and he just shrugs and says, "I just need it." Will you reach into your cash box and give him the money?
Well, maybe.
Now suppose he came to you and said, "Uncle, I need you to lend me 3 million Ugandan shillings. I need to buy a motorbike so I can attend trade school classes in the city." Will you reach in your cash box then?
Absolutely, yes. I would be happy to help my nephew get a good education.
Exactly. Now, no one is going to lend you and your shop money if you do not have a clear plan of what it will be used for and how much it will cost the lender. The point is, you should be able to say, "I need this amount of money for this specific purpose." If you can't, you shouldn't be applying for a loan. Next, you should consider what type of loan you will apply for. Now, different financial institutions will have different options. So let's look at some of the most common types of loans that are available. You might consider joining forces with a few other agro-dealers to obtain a group loan. With a group loan, money will be disbursed to the group. The group will be responsible for paying it back. These loans can be particularly helpful if you have never been approved for a loan before. For small shops, consider approaching a bank or finance institution that advertises microloans. If you need more than a microloan, you might consider applying for an MSME loan, which stands for Micro, Small, Medium Enterprise. Now, there are some financial institutions that cater specifically to businesses related to agriculture. These lenders will likely have loans that are designed to benefit agro-dealers and farmers. Places like this might have production loans which fund inputs and labor, asset loans which fund equipment purchases, and working capital loans which can help you purchase any products you need to stock for your farmers, such as seeds and fertilizer. The important thing is to determine what type of loan you are most likely to get. If you have a large business and want to rebuild your shop from the ground up, then an MSME loan might be the best option. But if you have never applied for a loan in your life, you might want to join forces with other shop owners and apply for a group loan. Now, throughout this course, we've discussed everything that goes into a business plan, from your marketing plan to your financial records to your operations and your risk. If you're applying for a loan, you need to pull all of that information into a formal business proposal. In other words, you need to write your business plan down and have a physical copy ready to present to lenders. Lenders want to know who they're investing in. They want to see that your business is successful or has great potential to be successful. We've discussed the details of every part of a business plan throughout our time together, but let's review them quickly in the context of applying for a loan. When you write your business proposal down, communicate your overall goals for business. Where do you want your business to be in a year? In 5 years? Do you want to expand the products and services you offer? Do you want to eventually open a second shop? Do you just need to open a shop in the first place? The key is to show lenders that you have specific goals in mind and that the loan you are applying for is essential to achieving those goals. Next, describe your marketing plan, or as some lenders say, your marketing strategy. Make it clear that you know who your customers are and that they want to buy, and that you have identified how you will make a profit from what you sell.
But what if I don't have customers yet? Again, I know that the farmers in my area will support me the moment I open my shop. Right now, they have to travel a great distance to buy feed and fertilizer. Once I open, they won't have to go so far. I'm not worried about lack of customers. If anything, I will have too many. As I said before, these people know me. I was a schoolgirl with many of them. They trust me. They know that I care about them. But I don't exactly have actual customers yet.
That's true, Namazi, but you have already laid out a strong argument for how you will build your customer base. You have identified that the farmers in your area need a local agro shop and that you are the person who can meet that need. These are all points that should be in your business proposal. After that, outline your financial management system. Lenders want to see that you are careful with money. They want to see that you use a budget and that you track your income and expenses. To that end, you must provide them with the financial records you keep. Typically, lenders will want to see 2 years' worth of records.
Show them my records? Ha! I can see it now. A lender takes one look at my records and finds the month I lost money and says, "No loan for this man. He cannot manage money." With 2 years of records, there's bound to be bad month. They'll just look at that and think I don't know how to handle my own money.
Not exactly. Although, you're right. Lenders will take a close look at the numbers. Those numbers should reflect what you say in the rest of your business plan. If you say you have many customers who buy a certain amount of feed from you every month of the year, but your records show that you sold almost nothing for 2 months straight, that won't help your chances of being approved for a loan. However, every business has bad months. To some extent, lenders will expect that. However, you need to make sure you explain your losses and how you recovered from them. For example, if there's an unexpected drought and farmers don't buy as much from you as normal, you should communicate that in your business proposal. Be sure to highlight anything you've done to protect your business from future loss. Maybe you added an expense for unknown risks in your next budget. Maybe you purchased a certain kind of insurance or even relocated your shop. Lenders are arguably most interested to see how you respond to a loss of income rather than the loss itself. Next, describe day-to-day operations. Be sure to include if you have any employees, if you own the business with someone, if you have a second location, who your suppliers are, if you own or rent your shop, and if you have any insurance. Write a brief concluding statement. Simply summarize your business goals, reiterate how the loan will be used, and express your commitment to the success of your business. The important thing is to demonstrate to the lender that you have a clear goal for your business, you have identified the means necessary to achieve that goal, and are a financially sound investment for them. Now, you also need to consider what you will do if you don't repay the loan.
Why would anyone not repay what they owe? Of course I would repay any money that I borrowed. I never go back on my word. If I say I will do something, then it will be done.
Of course, but unfortunately, your word is not enough. Just like agro-dealers, lenders have to manage risks in their business. However, in this case, instead of a risk being a poor harvest or a broken piece of equipment, the risk is, well, you. Every time a lender lends money, they are taking a risk that the money will not be paid back.
So, is there special insurance for lenders?
In a manner of speaking, yes. Lenders will want you to provide what we call collateral. Collateral is something of value that you own that the lender can claim if you do not repay your loan. It protects them from losing money and motivates you to repay your loan in full. To give an example, you could provide a vehicle as collateral, like a lorry or a car or even a motorbike. But you don't need to own a vehicle to get approved for a loan. Land or property could also be used for collateral.
But suppose I have none of those things. I do not own a house or any land. I can borrow my brother's car from time to time, and I intend on buying my own vehicle eventually, but there is nothing that I own that has so much value.
In your case, a group loan might be a viable option. However, you might also consider finding a guarantor. A guarantor is someone, usually a friend or relative, who promises to pay the loan back if you cannot. If they have collateral or a history of taking out loans and successfully repaying them, they might be able to act as your guarantor.
I do have an older brother. Recently, he has started making sweet potato flour, which he sells year-round. He's doing quite well. One of the few farmers I know that can still make money long after the harvest is over. I'm sure he would help if I needed him.
It sounds as though he may be able to. Just remember, having someone else act as guarantor is a serious commitment on their part. Before you do anything, you should sit down and have a long talk with your brother.
Perhaps show him my business plan as well.
Exactly.
Is it really this simple? A bank just needs the right information, the right collateral, and they will give me the money? This is wonderful news. I may apply for a little bit extra in that case. Why not?
Not so fast. Lenders have their own processes for determining whether or not to approve someone for the loan, and it can be a lengthy process. With that in mind, one of the best things you can do is make sure to submit any required documentation in a timely manner. No financial institution is going to seriously consider approving a business for a loan if they are chronically late or their paperwork is incomplete. There is a lot that a financial institution will consider, including credit history. That is to say, if you have been approved for loans in the past and have repaid them. Debt to income ratio. In other words, how much money do you owe people compared to how much you can reasonably bring in income? And finally, capacity to repay the loan. No financial institution is going to lend you money if they don't think you can repay it in a given amount of time. For instance, you might want a loan for 50 million Ugandan shillings. But if a bank thinks you're only capable of repaying a 20 million Ugandan shilling loan with interest, they're not going to approve your request.
That sounds complicated.
It is indeed. But let's presume you applied for your loan and you are approved. The money is disbursed and you get to work spending it. Then what? Well, eventually you have to repay the money. Remember, you must repay the whole amount or the principal plus whatever interest has accrued between the time the money is disbursed and the time you pay it back. Typically, you will discuss the timeline for the repayment of the loan early on in the application process. Loans to agro-dealers tend to be repaid around times of positive cash flow or at the peak of the season. No lender is going to expect you to repay a loan in full during the slow season.
Thank goodness.
Accessing credit is not easy per se, but it is possible when you make a strong case for your business. Whether you want to make small improvements or major changes at your shop, securing credit can help you achieve your goal. We have reached the end of this session. Take a moment to consider if there is any reason for which you might need a loan now or in the near future. Then, if you believe you might need credit, take a moment to write out a formal business proposal. This may take a little time, but you have to start somewhere. Once you are finished, discuss it with a friend or colleague. Then, find out what financial institutions in your area lend to farmers or agro-dealers.